Well, it looks as if inflation may be continuing to ease. That's according to new data released by the U.S. Bureau of Labor Statistics this morning. According to the report, prices of consumer goods rose 0.1% in May, bringing the annual level down to 4%. Core inflation, which excludes food and energy costs, is up 0.4% from last month. And this comes as the Federal Reserve is set to meet this week. So for more on this, I want to bring in Scott Wren. He is a senior global market strategist for Wells Fargo Investment Institute. Thanks for joining us.
Good morning.
I guess this is kind of good news, right? What does the data tell you?
No, it's definitely good news. I mean, this is the trend. The trend in inflation is down really since the middle of last year. Is it going down as fast as everybody would like to see? Probably not. But I think that, we're looking for the consumer price index to come in below 3% at the end of the year. So it's moving in that direction. It's been a little stalled the last few months, but it's moving in the right direction. And that's one reason why the market, in response to the report that you just mentioned, is up this morning in the pre-market.
Right. So in my sort of preamble, I brought up core price data because there's kind of like sometimes they separate out it's food and energy, right? Because they tend to be particularly volatile and they can skew what inflation feels like. But you're the expert here. So how does this compare to core price data? And explain the difference better than I did.
Well, who needs food and energy, right? So no, the Federal Reserve likes to look at core, which excludes food and energy, as you mentioned, and that's because monetary policy, at least in the Fed's mind, doesn't have a lot of influence. Food, that's a weather market, oftentimes. Same with energy. There's a hurricane that comes into the Gulf that shuts down oil production. It moves prices. So the Federal Reserve likes to exclude that because it is so volatile. But when you look at core, and core has been stickier, in other words, it's been slower to come down. You have things like used car prices, rents, shelter. We all know that the housing market in most of the country has been very strong. We have a shortage of places for people to live. So rents are high. Housing prices are high. So that's held that up quite a bit. And of course, the Federal Reserve, they want all of us out there spending less. They want it to really create headwinds for demand. And that's everything from energy to housing to cars, all those sorts of things. So the Federal Reserve is focused on core typically, but certainly all of us put gas in our car or go to the grocery store every week. So consumers oftentimes are really focused on the headline number that includes food and energy.
And so here's the thing, because the million-dollar question is, what will the Fed do, right? And when inflation started to soften, people started to kind of say, well, looks like the Fed's getting what they want. Inflation is higher than they want, but it's going in the right direction. At the same time, wages are still up, and services, what we're paying to get stuff done, is still pretty high right now. So bust out your crystal ball, if you will, and tell me, what do you think the Fed may do? What are the chances of them deciding to skip another rate hike?
I think right now the Federal Reserve tomorrow is going to pause. They're going to not raise rates tomorrow. That's the most likely outcome. But what they're going to tell us is that inflation is still well above what they're comfortable with. And if inflation doesn't continue to trend lower over the next few months, they'll hike rates. So that's the risk. That's not our base case, but certainly the Federal Reserve, today the headline CPI number came in at 4%. That's too high for the Federal Reserve. We think they'd be happy with 2 point anything, and we think we'll see that by the end of the year. But the Federal Reserve's not going to fool around. They're going to hike rates again if inflation stalls here and does not come down, probably really over the next 3 or 4 months or so.
All right, Scott Wren, thank you very much.